Aloha YouTube, thank you so much for checking out this video. If you're new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at 3 dividend companies that I'm loading up for in the month of December. These dividend companies have rewarded investors for at least 20 years. They are considered undervalued, and at the time of this video, they are less than $50 for each stocks. So these 3 companies are part of my plan to create a high dividend portfolio that will provide consistent annual income. So hope you like this video. Do me a favor, hit that like button, hit that subscribe button if you haven't done so. If you are new to my channel, aloha and welcome. Please remember that all this is not financial advice. This is just me sharing. Without any more delays, let's take a look at these 3 companies. So the first company I'm going to talk about is Altria. The ticker symbol is MO. Definitely one of my favorite companies. It is also one of those companies that are considered sin companies. I like this company because I think it's a solid dividend company in my opinion. There are risks for this one, so always remember when you are investing, always do your research, always make sure you know what you're investing in. So if we take a look at Simply Safe Dividend, based on their dividend safety score, they rated as 55. The dividend yield is about 9.45, and you got your market cap, which is a large cap. Looking at the key metrics, you can see payout ratio is about 77. Forward payout ratio is this. During the recession, they've increased it, and then you can see the dividend streak of 50 years, 53 years without a reduction. Now, checking out the dividend growth, last 20 years only 2%, which is very slow. Last 5 years 8%, which is fast. And then you got your latest. As you can see, it's up and down. They did have a dip in 2009, but as you can see from 2009 on, it's been an upward trend. 53 years of uninterrupted dividend streak without a reduction. Dividend growth for the past 53 years. If you want to know when you get paid, you get paid quarterly in the months of January, April, July, and October. Your annual payout would be $3.92. As you can see from here, Simply Safe Dividend rates it as undervalued, and then you can see the 52-week range is close to the low. From 41, the lowest was 39, and then you got your high over here. P ratios right there, and then you got all your other financials, your payout ratio, earnings per share, earnings growth, sales growth. As you can see, the sales growth in the past 2 years is going the other way. So now if we switch over to tip ranks, as you can see, the smart score rated as a 10. And then you can see right here, hedge funds have increased their shares by 77K last quarter. Insiders have bought their shares. And then you can see right here, you can see the price tag of 8% upside. Now, if we swing over to Seeking Alpha, if you look at the dividend estimates, you can see 2023, 2024, and then 2025. You can see how it's been growing. If you look at the dividend safety score, you can see A plus, dividend safety of a C, and you can see right here 5% dividend growth the last 5 years. And you can see the payout ratios. You can see ex-dividend date, payout date, record date, declared date. And then over here you can see some of these scores, the factor grades, growth, profitability, and then safety, growth, yield, consistency. So the next one I want to talk about is Verizon. Ticker symbol is VZ. Another company that I really like. Definitely one of the companies. I like AT&T too, but right now I'm leaning towards Verizon. Definitely a company that, in my opinion, pretty solid. Now, if we look at Simply Safe Dividend, based on their dividend safety score, they rated at 70, which is safe. You got your dividend yield of 7.11. And then looking down at the key metrics, you can see payout ratio is about 54. Dividend streak of 39 years without a reduction. They have increased it during the recession. Looking at the dividend growth, you can see 3% 20 years, 5%, 2% 5 years, and you got your latest. Again, 39 years without a reduction, and then you got 16 years of increases. So for payouts, you can see you get paid quarterly in the months of February, May, August, and November, and then you get your payout ratio of 2.66. And then you can see right here, maybe undervalued, and then it's in the middle of the 52-week range, so it's still, in my opinion, pretty decent amount to buy. I do believe Verizon's gonna bounce back at some point. I think it's just you're gonna get there. I feel like at some point it's gonna get closer to here, but we'll see how that goes. And then if you go to tip ranks, at the based on their smart score, they're rated at 7. Hedge funds have decreased, and then you got your bullish sentiment right here. 10-year performance, it's about 22%, but if you go to the 5-year, it's been lower than 18%. So annual forecast, if you look over here, 5% upside with the high of 45, low of 30, average of 39, and then the low of 35. And then your rating is a moderate buy. Now if we look at some of the analysis forecast, you can see it's a mixture, but the way I see it is mostly upsides. You can see here with 20% upside by this guy right here, and then you got your 17% downside. It's a mixture, but definitely a company that I like. Switching over now to Seeking Alpha, looking at the dividend estimates, you can see right here, 2024 $2.60, 2025 $2.73, and you got your rating over here. Looking at the dividend score, pretty solid scores in my opinion, and then you got your dividend grades right here. You got also 5-year growth of 2%, dividend growth of 19 years, and then you got your annual payout ratio. And then the last one I want to talk about is Flower Foods, ticker symbol is FLO. This is a company that makes all these delicious breads. Definitely probably see this in every places. You got your Wonders bread and everything. Now if we move over to Seeking Alpha, based on their dividend safety score, they're rated at 62, which is safe. You got your dividend yield of 4.30, and then you can see key metrics: payout ratio 73, forward payout ratio, dividend streak of 20 years without a reduction, 20 years 28%, 5 years 5%, and then you got your latest uninterrupted of dividend streak without a reduction for the last 20 years, and then you got your 20-year consecutive increases. And then you got your payout details in the months of March, June, September, and December. Annual payouts is 92, and then right here too is considered undervalued. And then your PE ratio is right here, 52-week range, very close to the low of $20.37. And then you got your other details of earnings per share, sales growth, outstanding note, return versus equity, return on investment capital. Now swinging over to tip ranks, based on their smart core, they're rated as an 8. And then you got your hedge funds have increased right here, 9% upside, and then you got your bullish sentiment. Now looking at the forecast, you can see 5% upside with the average about pretty much the same. And then looking at the details over here, you can see pretty much an upside with as high as 21% upside right here, 60% upside. Seeking Alpha next, you can see the dividend estimates. You can see right here, 98, 93, and then 90. And then if we go over to the dividends scoreboard, you can see right here B's and C's. Dividend grades right here, you can see the growth, yield, and consistency. So ex-dividend date is 11/30, record date, payout date, declared date, and then you get paid quarterly. Alright, those are my 3 dividend stocks that I'm going to load up Definitely going to buy these as much as I can from December and maybe also to November, trying to get a specific amount of dividend stocks for each of the dividend companies, so I can create that annual income about $470 based on the amount of stocks that I have in there. So thank you so much for watching, guys. Hope you like this video. Do me a favor, like and subscribe if you haven't done so. If you're also interested in other dividend companies, check out the other videos as well. Definitely take a look at them. Stay cool, keep investing, guys, and I'll catch you guys in the next video. Right, take care. Aloha.